The US stock market has celebrated its two-year bull market anniversary with the S&P 500 up 65% from October 2022, hitting its 45th record high. I'm Jessica Amir, market strategist with Mumu. Welcome to the weekly. So you might ask yourself if it's too late to invest in the US market. Well, the answer is no. The average bull market since World War II has risen 5 years, and the S&P 500 has gained 180% in that time, with the median gain being 100%. And as this time is a little bit different, we've got the US market being supported by several key factors. Let's bring those into play right now. So as we can see, we've got the US market being supported higher by US stimulus, China stimulus. Their economies are cutting interest rates, and this is boosting liquidity, as in money flowing through the system. We also have US company earnings growing, and that's expected to continue too. And that's, of course, supporting share price growth. Remember, the market is forward-looking. There's also a record amount of money on the sidelines, about 6.2 trillion US dollars worth. That is phenomenal. And some of that is expected to come into markets after we do have November US election certainty. So yes, the bull market could have plenty more room to run. If history repeats itself, of course it never does, but we know it typically does rhyme. So let's have a look at what's done really well over the last 2 years. As we said, the US market's gained about 65%, but we can see the semiconductor sector has moved in leaps and bounds ahead. It's up 261%. So why are semiconductors up over 200%, almost 300%? Well, it's because of stocks like NVIDIA. Stocks like NVIDIA have gained 700%. Supermicro is up by almost 500%. Now, what's really important is this. They're benefiting from earnings growing in high triple digits. These companies, in fact, if we have a look at all of the US large companies, their revenue is up the most. NVIDIA's revenue has risen 195% year on year. SMCI, their revenue is up 110%, just extraordinary. Secondly, the other theme to consider is uranium. Their stocks in this cohort, such as Vistra, are up 450%. Constellation Energy is not on the screen, but they're also doing really well, up by a similar tune. Remember, this is because we've got tech stocks such as Microsoft, Amazon, Google, increasingly tapping on these uranium companies' shoulders, asking to buy uranium directly from them to power their AI data centers on, which of course need lights and energy on 24/7. And of course, we know the world is increasingly, the macroeconomic factors are there to support the drive for cheaper, cleaner energy sources such as uranium. We've previously spoken about Fitch, as well as other rating agencies increasingly upgrading uranium. So we do believe that uranium is going to be a key sector to watch, absolutely benefiting from the AI pivot. The third sector that we can see that's really dominating is defense. General Electric, their shares are up 280%. They're trading at a brand new record all-time high. Now, GE does business under the name of GE Aerospace. Of course, they make about almost 50% of their money selling defense engines to for jets that are, of course, necessary in the defense sector. They also service US military defense engines as well. We recently spoke about GE winning US Army contracts, and so I believe that this is going to be a key company to watch. In fact, Deutsche Bank recently said the stock is one of their key ideas for the year ahead, and they see 20% share price growth. The fourth theme that you might be able to, I guess, take away that's really popping out is stocks benefiting from China stimulus. We can see Royal Caribbean, their shares are up 250%. And indeed, we've seen their shares hit a brand new record all-time high this week. Now, similar themes are being played out across the stocks that are being bought and sold the most at Mumu. If we have a look at what has been bought the most across the week to date, on Mumu's platform, we can see at the top of the list, we've got NVIDIA. NVIDIA is again continuing to be the most bought stock week in, week out, and that's been the same case for several weeks now. So the key theme here is that chip stocks continue to dominate. Secondly, China is coming back thick and fast. Even though its market has sold off a bit, it's still holding up at fresh highs, and investors are continuing to buy into China-facing stocks and ETFs. And the third thing that's taking place is that clients are buying into Tesla, but is worthwhile noting that we did see clients buying into Tesla ahead of the Cybercab launch at the weekend. But one thing to note is this. We've spoken a lot about the US bull market. Yes, indeed, it does look bullish, of course, with their market up 60% in 2 years. But please don't forget that gold is also catching up. The gold price is up 60% in almost 2 years as well. So, of course, you want to watch the S&P 500 ETFs like SPY, which is the world's biggest, and IVV, but you probably do want to keep a watchful eye on gold ETFs like GDX and GLD. They've been following the gold price up higher, and I think that these trends will probably continue. And that's the weekly.